In light of its present pricing, is XRP a good investment? Also, in light of a recent legal officer comment from Coinbase, are XRP and Ripple a regulatory sacrifice? We'll also examine the causes for the Ripple Data API's lack of updates since February 12th. The XRP buyback hypothesis has been resurrected with a new twist, but the key point is still the same: can the value of XRP be used as collateral? This brings us to our primary topic for the day. Please watch the entire video with me to discover more. Leading cryptocurrency hardware wallet company Ledger has alerted its customers to a fresh scam ploy that preys on gullible XRP owners. And according to a recent tweet, criminals in the legislative branch have developed a fake version of the Ledger Live app in order to steal XRP and users. Significantly, these criminals persuaded Ledger users to distribute the 24-word recovery phrase while impersonating as his company's employees. If consumers divulge their recovery phrase, scammers can access their XRP currencies without restriction. Fraudsters are stealing your hard-earned XRP by using bogus Ledger Live apps and posing as Ledger staff. Ledger issues a caution. Ledger also provided a screenshot of its official Twitter account so users could recognize phony tweets and accounts. Yet, as the United States Securities and Exchange Commission's action against Ripple nears a decision, speculation about its possible effects on the price of XRP has skyrocketed. Attorney John Deaton, who represents thousands of XRP holders as a friend of the court in the protracted legal dispute, gave voice to these rumors in a tweet yesterday. In light of the upcoming decision on the so-called summary judgment, the asset has an alluring risk-to-reward potential, according to the founder of CryptoLaw. In the upcoming weeks, the decision is anticipated. It wasn't stated, but it might even happen this week. The lawyer thinks there isn't much to lose and that the price of XRP would remain the same even if Ripple loses, since the firm would appeal, as they have hinted at. He is hopeful that if the asset classification is made explicit and Ripple receives a good result, the price of XRP might rise significantly. The SEC claimed that Ripple's sale of XRP to support its company violates securities law in a lawsuit filed in 2020. The regulator claims that Ripple was required to register XRP as a security. As a result, Ripple is fighting the SEC's classification of XRP in a legal spat that has lasted more than 2 years. Because of the SEC case, the majority of US-based cryptocurrency exchanges had to list XRP out of fear of legal action, which resulted in an estimated $15 billion loss for XRP holders. Until now, it has failed to retake its all-time high set in 2018. But it is generally accepted that if Ripple can win the legal dispute, this might alter. Additionally, a number of technical experts have identified the catalyst for this year's bull run. Based on previous market activity, iGrid Crypto, a self-avowed XRP permeable, predicted that the bull run would begin on July 1st and reach a target price of $80 in the coming months. For comparison, XRP is currently trading for 50 cents. Crypto Michael at MichaelXBT, who foresaw the asset's surge last week, projected that the price of altcoins would soar while that of other coins would barely budge. Please remember to tick the notification button and subscribe to our channel if you want to be the first to learn about new developments involving XRP. Attorney Deaton supports the chief legal officer of Coinbase, who asserted that the SEC's legal battle against the exchange is an assault on all cryptocurrencies. And in a recent tweet, lawyer John Deaton argued that Coinbase chief legal officer, Paul Greenwald, is correct to claim that the latest Wells notice that the exchange received from the SEC is an attack on the whole crypto industry, not just Coinbase. Particularly, Grow All mentioned on a recent episode of the Unchained Crypto podcast hosted by Laura Shingruel that nobody in the cryptocurrency industry is safe if the SEC may pursue Coinbase despite the firm being publicly traded. This conflict goes beyond Coinbase alone. If responsible actors that have significant AML and KYC programs and are submitting rulemaking petitions and attempting to engage with the government can be handled in this way, it will affect all forms of cryptocurrency. No one else is secure. Grow the Wall. Reportedly, members of the XRP community responded to the podcast in a variety of ways, with some saying Google's announcement came a bit too late. While many XRP owners believe that Google's response is 2 years too late after XRP was delisted, Attorney Deaton said he still thinks Gridwall is on track to assert that the Wells notification is an attack on cryptocurrency. According to Deaton, Ripple and XRP were viewed as a regulatory lamb sacrifice. He added that the San Francisco-based cryptocurrency exchange supported the usage of XRP for cross-border payments and submitted a report to the SEC in January 2018 declaring that the digital currency was not a security. In February 2019, Coinbase listed the coin. The creator of CryptoLaw claimed that if the SEC had proposed that XRP was a security, Coinbase would never have listed the coin because it required the regulator's clearance to become public. Owners of XRP understand how they feel about the delisting. Although I openly criticized Coinbase at the time for delisting it, the truth is that it was probably not all that difficult for Coinbase to decide to do so. To help with consideration, it requested consent for an IPO and desired concord with the SEC, Attorney Deaton continued. In response to Dean's tweets, Bill Morgan, an advocate for XRP, said he comprehends Coinbase's decision to delist XRP. In spite of this, the cryptocurrency exchange refused to support Ripple during its legal dispute with the SEC. Coinbase would have supported its earlier determination that XRP was not a security, according to Morgan. Nonetheless, Morgan claimed that because of its intentions to go public, the company decided against severing ties with the SEC. Yet, after Coinbase was listed, it continued to avoid publicly reiterating that its initial choice to list XRP was correct because it believed it was not a security since it was attempting to work with the SEC, he said. According to Morgan, the cryptocurrency exchange had just received a Wells warning from the SEC. Greenwald is now asserting that it was aimed at all of cryptocurrency. The exchange's duplicity needs to be exposed, he said, adding that the Ripple and LBRE cases were both jabs at cryptocurrencies. It is important to note that not everyone in the XRP community is incensed at Coinbase. Recall that shortly after, Ripple's principal legal officer, Stuart L. Daugherty, sent Coinbase the Wells notification. The old adage, "The enemy of my enemy is my friend," was tweeted. Despite Morgan's assertions to the contrary, Coinbase did not aid Ripple in its legal battle with the SEC. Notable is that the cryptocurrency exchange submitted an amicus brief in favor of Ripple. In addition, XRP supporter and cryptocurrency researcher Leonidas Hedge-Loiza said in a tweet yesterday that the Ripple Data API, which gives cryptocurrency exchanges and data aggregators information on XRP's circulating supply, is stalled once more. That occurs frequently, as the analyst has noted. The information reveals that the last update to the XRP circulating supply statistics was on February 12. Leonidas argues that it is not a major issue in a different tweet. He does, however, point out that neglecting to fix it will result in cryptocurrency exchanges continuing to publish false data. According to a poll conducted by Henson.xrp, the Leonidas finding has led to requests for the XRP Ledger Foundation to take over the upkeep of the API. As of right now, 271 people have responded to the survey, and 79% of them support the XRP Alves Foundation keeping the API. It is important to remember that there is frequently debate about the XRP circulating supply and the Ripple Data API. According to Messari, Ripple's quarterly reports and the Ripple Data API provided false information, causing many to greatly underestimate the pace of selling pressure from Ripple and its founders and affiliates. This accusation was made in a series of reports in 2019. The first of these reports claimed that these differences indicated that the market capitalization of XRP was exaggerated. Not only do the assumptions used in this research about lockups and selling limitations turn out to be erroneous, but the study as a whole is built on false market cap calculations. In reaction to the initial 2019 report, a spokeswoman for Ripple informed Forbes. To the dismay of the XRP community, Ripple locked up 55 billion of the 100 billion XRP supply in escrow and 1 billion tokens for the planned monthly sales in 2017. With a few exceptions, the company unlocks 1 billion tokens at the beginning of each month, selling an average of 200 million tokens while locking up the remaining tokens once more. Leonidas predicted in 2020 that it would take Ripple around 20 years to sell all its XRP holdings. In recent years, Ripple has made it clear that its XRP sales are limited to users of its on-demand liquidity product, who will use XRP as a bridge currency in international trade. For the first time, less than 50% of the available XRP was held by Ripple as of October, according to the Crypto Basics. The key question of the day is whether the value of XRP may be utilized as collateral. Jimmy Valley, managing director of Valhill Capital, has put forth a new variation of the XRP buyback theory, igniting discussions about the viability of using XRP as collateral. These discussions have prompted a response from David Schwartz, Chief Technology Officer of Ripple. Valley first put forth the XRP buyback theory in 2021, as was mentioned in earlier reports. It is a hypothesis based on the idea that XRP will replace dollars as the world's reserve currency. On the basis of this supposition, Valley said that the proposed buyback was necessary because massive government holdings of XRP must exist. The securities attorney proposed that this buyback would not take place on the secondary market but rather at a predetermined fixed price, much like the gold buyback when the US returned to using the highly prized metal as its official currency. Given that there is a finite amount of XRP, the fiat supply Valley valued one XRP between $37,500.50 and $1,000. Unsurprisingly, this price estimate in the theory has generated discussions over the years. Now, in an interview on Thursday, Valley has proposed a new idea in which holders of XRP use their holdings as collateral for a bank that has been given the working name of People's Bank rather than selling to the government. Although it doesn't seem like many people are interested in the latest scheme from the Valley, it has sparked discussions about whether XRP is a good asset to use as collateral for loans and borrowings. NZ unintentionally started the discussion when he claimed that XRP had no value to lend or borrow against. I wonder if Jimmy has been informed that XRP is worthless as collateral for loans or borrowings, as the validator tweeted, adding that you can use it as security. In order to support his argument, Z asserted that the collateral must have a redeemable value. But he argues that XRP only has value when it is being transferred from a holder to a buyer or when it is being redeemed, which is the cost at which an issuing business can buy back its stock before it matures. In a series of tweets yesterday, Schwartz responded to points made by Ripple in that NZ by pointing out that a firm only repurchases its stock at redemption value when it is required by contract. If not, it buys the stock at the going rate, which is determined by supply and demand, similar to how the value of XRP is determined. As a result, the value is not promised. Stocks are good as loan collateral primarily because they are liquid, according to Schwartz, who argued that the possibility of redemption would scarcely be taken into account. Schwartz explained that XRP has the liquidity and spot market price transparency that can make it an acceptable collateral. Although he acknowledges that its volatility is a drawback, he points out that loans backed by XRP can be excessively collateralized, have alternative forms of payment guaranteed, or, in the worst-case scenario, have high interest rates. Collateralized crypto-backed loans are already common in decentralized finance, as Schwartz overemphasized. It enables customers to borrow money against assets they plan to hold for a while and make other deals. According to Schwartz, some cryptocurrency investors may wish to borrow money against their holdings to make other purchases or even get a leveraged buy. This is a typical use case for DeFi. I'm not very interested in encouraging cryptocurrency millionaires to take on a little more risk. But I'm interested in the loan side because it may be a low-risk approach for folks who have little to no access to things like traditional brokerage firms to obtain a return on stored assets. We've reached the conclusion of the video, guys. If you liked it, please click like on the video. Don't forget to hit the notification button and subscribe. I find that the YouTube algorithm is greatly aided by this. Sharing this video with as many people as you can will also help enlighten others in the same way that you have been enlightened. Let's spread the word about this, guys. Don't miss any of our stuff if you are a serious Bitcoin enthusiast. I'll see you tomorrow to discuss the most recent news that affects our entire community.